Non-farm payroll is one of the most consistently important economic data events to come out in trading. But how the hell do you trade it? What up, folks? It's your boy Ed Cat coming at you with another video, and today we're talking about NFP, non-farm payroll. NFP is released on the first Friday of every month as part of an economic event called the employment situation. NFP basically measures the number of jobs created or lost within the given previous month, excluding jobs that have to do with the government, non-profit organizations, private households, or farming employment. This release of the number of jobs either created or lost within a given month, paired with the average hourly earnings of those employed individuals, is a really good indication of how good the US economy is doing and what interest rates are going to look like in the coming months. So this is a very important and powerful indicator of how the markets are going to move in both the short and longer term. If there is an increase in the number of jobs available in the economy and an increase in the average hourly earnings of the people employed in those jobs, that is very good for the economy and suggests that the economy is strong, and that is going to strengthen the dollar quite significantly. And vice versa, if the number of jobs created is reduced or lower than expected, and the average hourly earnings are also lower than expected or reduced from the previous month, then that doesn't really bode well for the economy, doesn't bode well for the currency, and could show a significant downtrend in that market. Now, even though NFP is a US economic event, because the US is the largest economy in the world, there are a lot of other countries and companies that have a lot at stake in how the US economy is doing. Thus, something like NFP, which has the power to drastically shift the US economy in the short term, it is also going to affect markets in other countries. Thus, due to the large vested interest in NFP, when the economic data is released, you can expect it to be quite volatile and massive moves to be made quite quickly, because large institutes also have their hand in moving the markets when that data release comes out. And because of how important NFP tends to be and how much speculation there is on what the economic data release is going to look like, the morning of NFP or the hours preceding it tends to be very flat on the market, with it tending to become a little bit more volatile just before the release and then a massive move when the release happens. So traders are advised to act with caution the day of NFP, because the market can be quite unpredictable until that release is coming out. So that is the long and mostly short of what NFP is. It can be a very exciting event to trade, but if you are on the wrong side of the markets, and sometimes even if you're on the right side of the markets, due to the volatility, you can still be knocked out cold. So exercise caution when you're trading NFP. Do not risk more than you are willing to lose. And if you would like a little bit more insights on what a safe way to trade NFP is, go ahead and hit the comment section down below and let me know that that is something you'd be interested in seeing. That was NFP. I have been Ed Cat, and we will see you in the next video.